Hi, everyone, and welcome to another First Tuesdays event with Alex Hetherington. Today's event, we're going to be talking about integrated thinking and the business case for integrated thinking. Now, Professor Mervyn King often says that integrated thinking comes from doing an integrated report, and integrated reporting is fundamental to integrated thinking. So I would like to hear what the panelists have to say today in terms of the business case for integrated thinking and how we can get it implemented and embedded in an organization and throughout the organization. But if you'd like to tell us where you're from, in the chat function, you see that the chat function is open. Let us know where you're from, where you're dialing in from. The reactions are also open. So if yes, thumbs up, clap hands if you like something that someone has said, just to give some reaction. That would be fabulous. We'd really appreciate it. If you are wanting to link with other people, you are more than welcome to put your link to your LinkedIn profile on the chat function too. But if you're wanting to ask questions, please ask the questions using the Q&A function, because there we can easily access the Q&A, and I will be providing those questions to Alex and letting him ask the questions of the panelists. But without any further ado, I'm going to hand over to the panel to start their discussion today. Thank you.
Thank you, Carolyn. Good afternoon from Cape Town, and to those of you who are on similar timelines to us. Good morning to those of you in the Americas. Good evening to you in the East and the Anzac regions. In 2013, the International Integrated Reporting Council, the IIRC, launched the Integrated Reporting Framework that intended to inspire companies beyond traditional sustainability reporting as it was then, by integrating financial, environmental, and social metrics in reporting, particularly in how value is generated by companies over different timeframes. At the time, it was a significant step change in corporate approaches to sustainability, and what has later become known as ESG. The framework refers explicitly to integrated thinking and the importance of embedding integrated thinking in mainstream business practice. An amendment to this in 2021 to the original definition of integrated thinking clarifies the point that integrated thinking considers not only the creation, but also the preservation and the erosion of value. What we're wanting to tackle today is exactly what is integrated thinking. Is it a concept? Is it a practice? Does it translate into financial performance, and how are companies adopting its principles? And I guess at the heart of this is also what is commonly understood by value. Is value a subjective concept or something that we can actually measure? So to discuss this today, we have a globally diverse panel of real experts on the topic. And we're very excited to have them with us. From New York is Jenna, who is Manager of ESG and Sustainable Business Insights at Chief Executives for Corporate Purpose, or CECP. That's the philanthropic NGO established by actor Paul Newman and others to advise CEOs on how to invest in some of the world's most pressing problems. Prior to this, Jenna has held various sustainability-related positions with the GLG Institute, the World Economic Forum, and the Conference Board, just to name a few. Jenna has incorporated integrated thinking into much of her engagement with CEOs and member companies. From London is Dr. Jeremy Osborn, formerly a scholar of modern history, but somewhere along the way, Jeremy saw the light and switched to accounting. He is now Global Head of Sustainability at the American Institute of CPAs and the Chartered Institute of Management Accountants. ACPACIMA, as it is known, is the international membership-driven organization of accounting and financial professionals. Prior to this, Jeremy was Director of Accountancy Relationships at the Value Reporting Foundation, which was later incorporated into the IFRS Foundation to assist in the establishment of the International Sustainability Standards Board under the IRFS. In this role at VRF, Jeremy was one of the lead architects in the drafting of the integrated thinking principles. Finally, from South Africa, we have Nick Rockey, an engineer by training. Nick followed this up with an MBA, after which he founded Trialogue, who for over 2 decades have been specialist consultants in social impact, ESG, evaluation, and corporate reporting. Trilog have produced numerous handbooks in the status and implementation of corporate social investment and integrated reporting, and now provide integrated thinking into corporate environments. So I think you will agree with me that we have a fine panel. I would like to welcome all of you who are attendees from around the world. Please do send in your questions. We will endeavor to get to as many of them as possible during the course of the webinar. That is where we get so much of the richness of the content. And we will, if we do not get to them, we will collect outstanding questions and try our best to get answers to them. But let me start off. Nick, can I start with you, please? Can you tell us exactly what is typically meant by integrated thinking? What is your interpretation of it, and what are the key points that that companies need to be thinking about in this?
No, thanks, Alex. And yeah, maybe I'm just going to turn that question around briefly and start with what integrated thinking isn't. Carolyn alluded to the relationship between reporting and integrated thinking. And when we first got into the space, most of the corporate activity was in reporting. So we were writing reports for companies, often creating messaging on behalf of those companies on issues that weren't actively managed in the company because they felt these issues were important to talk about, and reversing in advisory processes to companies to help them undertake activities that they could then report more credibly against. And that's not integrated thinking. What happens then is that you end up with a lot of disparate initiatives going on in the organization, not actively managed, not in a cohesive manner, with bit-part thinking. And that was our sort of entry into the space. Integrated thinking's a lot more complex, and it lags reporting on the grounds that there's a lot of guidance around reporting. Reporting is easy to look at, evaluate your peers, their reporting awards and the like. There's not as much activity or guidance around integrated thinking. So we think that ultimately thinking needs to lead reporting. You do first, and then you talk second, and ultimately it's a more complex process that really requires the absorption of a lot of key principles as coming out of the Value Reporting Foundation. But it's fundamentally a change management process. And if I can just share a screen quickly without taking too much time, Alex, just on a process that we think is pragmatic. It's the one that we apply to this space.
Please do. Yeah.
Thanks very much. So rather than starting on the right-hand side of that chart, where you really are worried about your report, and even often in companies, the communication part is not integrated. So the sustainability report and the integrated report don't translate to what goes on the website or in their corporate communications. And then ultimately working back up into trying to figure out metrics that you can report against, and then issues around materiality and stakeholder engagement. And that's, we think, is a bottom-up approach, which is fundamentally not, it doesn't fundamentally lead to change to the extent that's required, as opposed to starting at the other side of the spectrum, where you really look at the external context, the purpose, the strategic ambition of the organization. What is the raison d'etre of the company? And that's what sets the scene. If you can then ultimately, because it's a change management process, leadership have to be involved. They have to buy into that process. So they set their ambition and they drive the commitment through the organization. And then that translates into governance processes, accountability processes, etc., materiality, and it flows down in that direction. So you can deal with any one of these items, but we think all of this needs to come together in a coherent way. And ultimately that there's a continuum between purpose, business strategy, and ESG. And that ESG is fundamentally a mechanism for enabling purpose in an organization. So I think that's what integrated thinking about. It's a very complex space, but I'll stop there and we can come back to more of this in the discussion points.
Thanks, Nick. I mean, one of the things I'd like to try and get to is, is this new thinking in the corporate space? Is it really very different from how companies have looked at issues in the past? And maybe we can touch on that in a few minutes. Jeremy, if I can come to you, there is a lot of talk around the fact that integrated thinking within companies, or let me put it another way, companies that are expressing and demonstrating strong ESG principles and also action, which has been informed by integrated thinking, actually in one way or another leads to better financial performance. I'm asking you to put your accounting hat on here and to talk to the CFOs. How do you, how would you argue that an integrated thinking approach will ultimately deliver better financial performance in the long run for a business?
Thanks, Alex. Well, I think I'd like to pick up on a point that Nick just made. Well, 2 points actually. One about change management and one about the continuum. I think Nick's absolutely right. The integrated thinking is fundamentally a change management endeavor and quite a significant one. And that really links that point about the continuum. When we were drafting the integrated thinking principles, when the Value Reporting Foundation was briefly in existence for the year or so it was around, it was the connection between the different principles that we really wanted to bring out. This isn't a sort of a single thing that needs to be done well, like reporting or like having a purpose statement or a well-articulated strategy. It's the connection between all of them, which I think, Nick, was your point about the continuum. So if we think about integrated thinking from those perspectives, i.e. change management and the connections between the constituent parts in a way, of integrated thinking, we can perhaps start to tease apart the value that it creates. And as you said, from the perspective of Alex, of a CFO or a hardcore accountant, what is the value of doing this? Well, and being a good historian, as you said, I like to start with where the evidence is, rather than just, well, this is what we think might happen. And I would draw everybody's attention, I think, to a couple of sources I think are very helpful evidence. The first, which is on the IFRS Foundation website, is a series of case studies that were begun under the IIRC and then absorbed into the work of the Value Reporting Foundation, which asked exactly this question of CFOs and CEOs, largely of mainly of large European companies, of what does integrated thinking mean to them, and what value has it generated for them? And I always think it's helpful to hear it from the horse's mouth, i.e. from business leaders. The story there, if you were to go and have a look at a handful of those case studies, is fairly consistent, which is from a CEO perspective, it really helps them understand their strategy and to help ensure that everybody is pulling together behind the same strategy. And that difficult balance between value creation now that might be expected by shareholders or demanded by shareholders, and value creation over time, which is often where the sort of broader stakeholder value creation comes in, are held in balance with one another. And I think, in my view, a lot of what integrated reporting and integrated thinking tries to do is to redress that imbalance, which has arisen particularly over probably the last third of the 20th century and then into the 21st century, where shareholder primacy has really been at the forefront of decision making. So those case studies, and I was involved with a number of those, are really helpful, and they are from large, complex organizations, and they just give you a sense of the nuanced value that can be created from integrated thinking. So that's number one for those CFOs who perhaps like to hear a story and read a story. For those who couldn't give a stuff about stories and just want to know about the numbers, that's where things get quite difficult. There have, however, been a number of really strong studies over the years, primarily looking at integrated reporting. And if we think about integrated reporting as an expression of integrated thinking, and Carolyn posed the question at the beginning, which comes first? Well, probably one does come first. That's just being practical, but ultimately you can't really have a really good integrated report without integrated thinking. There is one study which is very well cited. It's a 2017 study, and actually the population for that study is South African companies, and it looks at the quality of integrated reporting and the demonstrable benefits from that. It's a peer-reviewed study. It's University of Auckland, Stanford, I think Pretoria, and National University of Australia. We've, myself, colleagues at the Value Reporting Foundation, RRC, have often quoted this study because it's a very robust study. And what it demonstrates or suggests is that there is a strong relationship between the quality of an integrated report. And if we think about that as a sort of litmus test in a way of the quality of integrated thinking, and better clarity amongst shareholders with the strategy of the organization. So that in a way goes back to that point from the case studies about better strategy execution, and improved understanding and clarity that shareholders have of the likely future cash flows of the company. And of course, that's one of the key things that investors will look at, is what are the future cash flows likely to be? And therefore, is that, I'm just simplifying things horribly, but is that particular company undervalued or overvalued or correctly valued in terms of market valuation? And what that study suggests is that better quality integrated reporting, in which the sustainability and the financial are connected with one another. And to quote the new standards from the ISSB, the sustainability related financial information is better connected with the hardcore financial information, really helps investors understand what the company is doing with its strategy, for them to be able to come to their own assessment of how effectively that strategy is being executed, and for that to help inform their calculation, investor calculation of future anticipated cash flows. So it's quite a sort of nuanced argument I'm putting forward. I don't want to suggest that if you do integrated reporting well, it will result in the following financially. But I think for anybody particularly who works in investor relations or perhaps on the corporate finance side of things, anything which might help investors reach a better, clearer understanding of the organization's strategy and strategy execution is likely to lead to some positive benefits from the company in terms of perception of market valuation. And that's really what this paper puts forward. And I think it is useful to look at something that's peer reviewed. Case studies are always helpful, but of course they're not peer reviewed. But if you read enough of them and they're all giving a similar message, which the ones on the IFRS Foundation website do, I think that can supplement sort of the rather drier, perhaps hardcore quantitative analysis that goes into a peer reviewed study like the one I've mentioned.
Thanks for that, Jeremy. I mean, I'd also just like to highlight a couple of papers that I read on this topic. One coming out of the University of Auckland and another one from the University of Bucharest, where empirical evidence has been provided in terms of improved or lower, weighted average cost of capital and or lower financial risk associated with companies that are adopting integrated thinking. And I'll share those links with the audience later. But Jenna, let's come to you. So you are working with CEOs. You are literally having to get them to arguably maybe change their strategic thinking around their companies. You are at the coalface of it. Nick mentioned the primary need for leadership, and leadership, as we all know, within the sustainability world is absolutely critical. Tell me how you engage with the CEOs that you are involved with, and how you get them to adopt integrated thinking, and is it relatively easy to do, or is it challenging?
Yeah, thanks, Alex. I will say we've definitely seen an uptick in companies leaning into integrated thinking over the previous years, and with the extensive pressures companies are facing from many different stakeholders, it's becoming increasingly difficult for companies not to embrace integrated thinking. For the past few years, the Edelman Trust Barometer has shown that businesses are the most trusted institution ahead of governments and even NGOs. And stakeholders are really expecting companies to take stances on tough issues, have a positive environmental and social impact, but of course still perform financially. And I think one of the major challenges to integrated thinking is naturally more suited, it's integrated thinking is more naturally suited to the long-term value creation, but companies are under immense pressure to meet their quarterly earnings expectations, host of quarterly earnings calls, which typically puts environmental social topics by the wayside. And CECP actually spearheaded an initiative led by Alex Gorski, the former CEO of Johnson & Johnson, and Bill McNabb, the former chairman and CEO of Vanguard, to shift this conversation in the capital markets to be more long-term oriented and help companies through that change management that Nick and Jeremy discussed. And with this coalition, we developed an integrated long-term plan framework that is aligned to the Value Reporting Foundation, and it integrates the principles. It spans financials, environmental, social, and governance issues, and guides companies to really tell that story of the interconnectedness of our 11 themes within the framework, and use it as a tool to guide the strategy setting. And we host an annual event for CEOs to share this integrated long-term plan with investors that have over 50 CEOs representing over $3 trillion in market cap, having participated over the past years. And then building off Jeremy's real-world examples, we've heard from companies that this exercise has really been a force function to catalyze internal collaboration, leading to greater internal buy-in and alignment between senior leadership and the board. And to your point, Alex, you really need that senior leadership and board buy-in to drive the change in the mindset thinking to have that sustainable leadership and take a stance. There's also been a financial component that Jeremy has alluded to, where our sample size has been very small, but early indications show that companies that have presented their long-term plans have seen a positive uptick in market movements.
Okay, thank you. Thanks for that. I mean, if I can just stick with you for a moment, are companies seeing this as a new way of thinking around their strategy? Is this unique?
I wouldn't say it's terribly new. It is a little bit more structured in helping companies think through the interconnectedness of these themes. We have all the functions operating in a siloed manner, and this being a force function to really bring the different functions together to have those hard conversations. And we heard from a previous company that has gone through this exercise that it really forced the ESG DEI teams with the strategy and the business leaders to have that conversation and really define what their company's value is and how to articulate that externally. So it's really an internal exercise and tool to help companies change their mindset, actually get boots on the ground and get to work in this area.
Okay, thank you. Jeremy, coming back to you, you used the phrase there, shareholder primacy, obviously being something that might, on the surface, run counter to the intentions of integrated thinking, just in terms of timeframes, short-term investor thinking versus long-term value creation by corporate. But we are seeing a change in attitude from shareholders. We are seeing shareholders being more aware, better informed, perhaps better educated about the value that ESG can bring in terms of understanding a company's long-term worth. Your viewpoint on that, do you think the investor community is a primary driver of integrated thinking, or could it be? Or are we still at a long way off and there's a schism between investor needs and what we're trying to achieve with integrated thinking?
I think it's probably worth teasing that apart a little bit, Alex, in terms of a question. I think Jenna's point is a fair one, that this integrated thinking is really about the management of a company. It is a management philosophy as such. And therefore the primary sort of audience, inverted commas, for integrated thinking is the firm itself, the organization itself, because ultimately they're the ones who are responsible for the key tenets of integrated thinking, such as the organization's strategy or its management of risks and opportunities. However, as you said in your question, it is part and parcel of value creation over time. And that's clearly something where investors will have a view. Some may be investing for fractions of a millisecond and have no interest in what's going to happen beyond about 1 second from now. But the organizations really that this is aimed at are those who are investing for the longer term. And often that's thought of in terms of pension funds, because they're, of course, inherently investing over the long term, and the combined power and value of those investments is gargantuan. And that's where I think it is really important for organizations to be actively considering that balance, and it is a balance between value creation in the short term and value creation in the medium and the long term. And I think it's where the first two standards that have been issued by the IWSB, so IFRS S1, IFRS S2, will really help sharpen minds around this, because one of the requirements of S1 and S2 is that organizations look forward, and that they look forward in the short, the medium, and the long term. I think that's the language that's used in S1 and S2. That is probably going to be quite uncomfortable for CFOs in the finance team and head of investor relations, who are used to perhaps limiting that forward-looking view as much as they feel might be appropriate. But actually, the S1 and S2 are really requiring companies to think about value creation over time. And that's where I think that notion of shareholder primacy is fundamentally challenged, because value creation over time, without a consideration of other types, the impact that an organization's operations, its products, its services, its procurement, its broader value chain is having on other types of capital or resources and relationships, it would be anathema to ask about value creation over time without also a shareholder value creation over time, without also thinking about stakeholder value creation over time. And again, I think it's where the language of S1 and S2 is really helpful, although again challenging for those who may not be as familiar with this language as those of us who've been working in this area for a while are. Brings in these other types of resources and relationships, such as natural capital, human capital, social and relationship capital. And organizations will have to start thinking about the interplay between the two. So I think investors who have a long-term investment mandate, such as pension funds, will be taking a keen eye on what these future disclosures are. They'll come to their own view about the connection between what the organization says about its management of these other resources and relationships and its relationship to them, and its forecast or anticipation around future business performance and perhaps more traditional financial metrics. But the other thing which I think is, I tend to hear, and I think it's because it's prominent rather than just my ears are pricking up at this, when one hears investors and those who are on the hardcore investment side, the thing that they want to know at the moment is, what is an organization's transition plan towards a lower carbon business model or a net zero business model, depending obviously on the particular environment in which that business is doing business. And it's really, really interesting to an investor perspective, because when they cast a very objective, critical eye over the information they currently see, generally what they say is it's not passing muster. That they don't have confidence in the data in terms of the timelines, the ambitions, the metrics, how the organization will hold itself to account. So I think in terms of the urgency of what should an organization be thinking of in the context of value creation over time, I think for many investors, it's a clear articulation of what the transition plan is for the business towards net zero or towards a lower carbon business model, again, depending on what its particular political environment may be in terms of regulation, and what its timelines are, its ambitions, its anticipated, its performance relative to its peer group, all of the stuff that they will be doing anyway, investors will be doing anyway with financial information. And that's an area where I think there's a lot of work to do. And I think it's where integrated thinking will support that. As Jenna said, it's about sort of in a way banging heads together within an organization and providing different teams, different functions, lubricating the intellectual oil so that machinery within the organization, so that there's a coherence towards how the organization thinks and acts.
Okay, thanks. I'd like to just take this opportunity to attendees listening in. You've got a great panel here. Please do feel free to start to send questions in. You can, I think we've provided a pretty good foundation around what is integrated thinking, what it possibly can achieve. But Nick, I'd like to come to you and your thoughts on some of those issues that that Jeremy raised around value creation over time. Maybe, you know, we've got to focus around the transition to a low carbon economy or decarbonization, but integrated thinking is so much more than that, isn't it?
No, it isn't. And you know, I think we can sort of paint in what a mature integrated thinking process looks like, and we recognize that most companies aren't even close. You spoke about the journey as it's now becoming something that's on the CEO radar, and I mean, we've been in this space for a while, and we've seen us move from very much a fringe issue dealt with on a reluctant basis by at a middle management level, to when investors started asking questions, to all of a sudden there was executive interest in this space, to a point where the raters and rankers are driving companies scatty now with questions and completion of forms, to I think the point where there's now you know, the codes and standards of the likes of TCFD are really starting to look at forward planning, integration with strategy and the like, and a meaningful, asking for a meaningful response, a response that can't be gained by the company by a report which answers a lot of ticks a lot of boxes. And I think that not only from an investment perspective, but also shareholder activism perspective, people are, and you know, active share ownership of some of the asset managers are going in and starting to ask questions. We're starting to see, I think, real attention being paid to these issues. So I think it's been driven externally through pressures. But fundamentally, if the company takes back control of its own situation, if it comes back to its core and says, what are we in business for? What's our purpose? What are the principles that we need to follow? And those principles are there. They're there in the value. They're true in all the codes and standards, but in the VRF as well. And if the company adheres to that, it will take control of its own journey in this space. And ultimately not be pushed around by external forces, because we see a lot of reactive behavior in this space. And I think fundamentally this integrated thinking, the need for companies to interface, to look broadly at their capitals, to interface with society, to not operate now, that's not going to change. And it's a big, intensive time-intensive, cost-intensive process. And ultimately you need to start the journey, and you need to do it in a methodical way, taking on these concepts, taking on the thorny issues. You know, you can go and ask the procurement manager about ethics in the supply chain, and can he report on that? But unless he has a directive to actually manage that issue, and unless there's a mandate to do it, and there's a budget to look at that, and there's an understanding of trade-offs around that, you're not going to move forward as a business. And all of these issues need to.
Can I come in then, Nick? Because we actually do have a fascinating question that's been put up around trade-offs. So if I'm understanding the question correctly, we are, you know, companies are prone to talking about the positives of the ESG activities and performance and what they're doing, but everything does actually ultimately, in one way or another, come with the trade-off. If you are perhaps arguably trying to decarbonize your supply chain, you might be overemphasizing or giving a bias to greenhouse gas emissions versus other ESG issues that might be applied. So integrated thinking, I don't know if any of you, I'll open it up to the three of you. How does integrated thinking deal with trade-offs?
Yeah,
if I could just say, I'll be brief because I've just spoken. Sorry.
Go ahead.
I think trade-offs is something that needs to happen at the right level, and that's a board level. It's a board level discussion, because they are fundamentally, it's not something that we find people creating a business model describing trade-offs which are meaningless and retrospective, in a report. That's not meaningful. Integrated thinking requires the hard, nutty conversations at a board level about what you do, what you don't, what the cost of doing what you do. And that decision needs to be informed by purpose, the values in the organization. I think that's where it sits.
Okay, great. Thank you for that. Jenna, I've got one particularly for you, but if you want to add in here, and then I'm going to come back to you with another question.
Sure, I'll just build on the trade-off question. And I would add to Nick's comments that it also comes down to transparency in communicating to investors, stakeholders, what the trade-offs are, instead of being a little bit secretive about them. But I'll point to one example, Philip Morris International, major tobacco producer. They are committed to totally transforming their business model to be a smoke. Their vision is a smoke-free world. So they are completely transforming how they do business, how they operate. And that has a lot of trade-offs in their supply chain, in their employees. So they have been very transparent in what their goals are, where they want to take the company, but also being transparent about what it will take to get there and what the impact will be. So it comes down to, of course, Nick said, board, and then just being transparent with stakeholders.
Yeah. Okay. So that's obviously a fundamental component of this is the transparency. So that obviously talks to the integrated report, but it also talks to the way the company presents itself at AGMs or investor roadshows or any other public forum. So it does really need to be embedded within the culture of the organization, of course. I'm going to come to you,
Alex,
Jenna,
I think
on you. Yeah, sorry, Jeremy, go ahead.
There's one other thing that I'd add to that, and that's the question of materiality, which for anybody on this call who's considering the future, well, the EU corporate sustainability reporting standards, that's obviously a key feature. It's a key part of S1 and S2, and it's a central element of the integrated thinking principles as well. So in the context of trade-offs, I mean, as you said, Alex, any business is used, or any business leader is used to dealing with trade-offs in the day-to-day management of the business. What this does is extend the sort of the horizon of what those trade-offs might be to include things which the organization may own and manage directly, things which it may have some control over, such as its workforce. It doesn't own its workforce, and things that it may have very little influence over, and no control, or very little control, and no ownership, such as its value chain. And I think in the context of the management of ESG issues, materiality is an absolutely critical concept, because and it links to that point around transparency, that if an organization has undertaken a sort of robust process to establish what its material ESG considerations are from the perspective of value creation over time, and that balance between shareholder and stakeholder value creation, and it's transparent with how it communicates that internally, externally, through its annual integrated report, through its AGM and quarterly shareholder briefings, etc., then the inherent trade-offs that there may be between management of, I don't know, an environmental consideration and management of another considerations such as human capital or something, then it becomes understandable as to why the organization is doing what it's doing. So I think it's a combination of both the transparency of the communication and the materiality of the issue, or the communication of the materiality of the issue.
Thank you very much. Thanks, Jeremy. I mean, it raises in my mind perhaps a thorny question. How do we know if a company is successfully implementing integrated thinking? Is there a set of indicators? Is there a scorecard? Is it purely stakeholder perception? I'm going to again open that one up to any or all three of you. How do we gauge the success of integrated thinking within an organization?
Yeah, I mean, I can come in. One needs to, I think, go through a process of mapping where you are, assessing your situation, and then, obviously planning and building out a roadmap. So where are we? Where do you start? Our process is simply, we've got indicators against our process, and we just rate it on a Likert scale type analysis to look at a sort of sub-principle level where you stack up. I'm sure you could do that against any particular framework, but ours is a process flow. So we would look at, for example, conscious adoption of codes and standards, the materiality processes, the role of stakeholder engagement within an organization. And these things all come together and they've got to fit together, but you can isolate various different components just to see whether at what level they're being dealt with and how they've been dealt with. And I think ISO 37000 provides some good governance. It's not a dissimilar approach looking at maturity of adoption. And that can also, we've looked at that in terms of how that aligns. And so there are different techniques. But at the end of the day, you need to look across the spectrum and say, where are we doing well? Where the blind spots, where are the gaps, and what do we fix? And sometimes those elements that you can attend to can be dealt with quite easily. And sometimes they are really big processes. If you are aligning incentive structures to performance, that doesn't happen quickly. It's a big process.
Absolutely. I can understand that. Jenna, your thoughts? I mean, when you're dealing with the members of your organization, how do you know whether if and when it's actually working?
Yeah, since we covered the financial side and management side, I'll bring up a point that we haven't really touched on yet, and we're talking about the employee perspective, and they're a key stakeholder to any business, the most valuable asset and resource a company owns, or doesn't own, but has. And we're seeing such a mindset shift with these younger generations coming up in the workforce, wanting to know how companies are managing for the long term, how they're managing all these different aspects within environmental, social responsibility. And I think once you see that behavior change coming down from the executive and the board level and it's trickling down, you'll see it in the form of employee engagement, employee retention, more engaged workforce. We've been in a global war for talent the past couple of years. It's a unique time it's hard to retain talent. People want to work for good companies, and that being a critical internal measurement and indicator to understanding whether integrated thinking has been successful.
I mean, would you go so far as to say employee satisfaction is arguably a litmus test?
Yeah, I think there's a couple different indicators companies could look at: employee satisfactions, annual engagement surveys, retention. Those types of things are good indicators and good tests depending on the outcome that companies want to measure.
Yeah, thanks. Jeremy, we have a question directed specifically at you regarding your work at the VRF and the drive in those days around reporting on diversity of capitals, the different capitals. This is slightly tying into a second question as well around the fact that it seems that so much of the ISSB at the moment seems to be focusing on the capital markets, on the financial players in the corporate space. To what degree do we continue to push the diverse multitude of capitals versus any other forces coming in at the moment that might be kind of stealing the limelight?
Thanks, Alex. So I think it's worth just going back to first principles of what the ISSB was set up to do and what its governance structure is. So ultimately, the ISSB is overseen by the IFRS Foundation trustees and IOSCO. And IOSCO's members regulate, I think, something like 96% of global market trade. The purpose of anything that's published in terms of the standards by the ISSB will always be first and foremost on the needs of investors, and that's inherent in the governance of the IFRS Foundation and the two boards that the team manages. So I don't think one should have any surprises about that. However, now we have S1 and S2, which were launched in June. It's really helpful to look at the language within those. And for anybody who's read both standards in detail, what you will see is that obviously the primary purpose is for organizations to communicate how their management of sustainability-related risks and opportunities maybe affecting the financial performance and prospects. So that's a huge leap of faith for anybody who works in corporate reporting, and I mean the hardcore financial reporting, to have to make, because that will have a ripple impact across all of the management reporting and how an organization thinks about value creation. But part and parcel of that, as I mentioned earlier, is the introduction of a broader approach to resources and relationships than one would be used to seeing from an organization, from a board such as the IASB, which creates the financial accounting standards, the sister board to the IASB. And that's where we see explicit reference to natural capital, human capital, social and relationship, etc. So the language has crept in. The sharp-eyed on this webinar may have noticed that a board meeting of the IASB just before Christmas in December 22 defines sustainability in terms of an organization's sustainable management of the resources and relationships within its value chain, and then again went on to explain and illustrate those in terms of the 6 capitals of the integrated reporting framework. So I'm confident that in the fullness of time, those concepts will find expression in future standards as well, as the topical standards roll off the production mill of the IFRS staff team through the IASB due process. And of course, they've just closed a consultation period on what the priority should be over the next 2 to 3 years for the IASB. And one of the key questions there is, what role will the integrated reporting framework play? It's not for me to judge what the feedback is, but from what I've read, a lot of respondents have indicated that this should be a key priority for the IASB, drawing on the concepts of the integrated reporting framework and the work that the IASB has done on the management commentary, and for these 2 boards to work together on this project. So we obviously don't know at this stage what the staff team will recommend to the IASB, but I think given the fact that the IFRS Foundation acquired the integrated reporting framework last August through the acquisition of the Value Reporting Foundation, along with the integrated thinking principles and the SASB standards, I think that the future for a multi-capital approach to both reporting, and therefore the impact that that has on the management of an organization, I think at this stage is looking pretty rosy.
But by implication, I think you're saying it's still a work in progress.
By necessity, it is a work in progress, because I think one of the reasons that the IFRS Foundation and the IASB have been so successful over the last 20 years or so, and bearing in mind that the IASB's financial standards, I think, have been adopted in 140 jurisdictions over the last 20 years, is through the transparency of the due process. And part of that is a transparent stakeholder engagement process. Anybody can download any of the comment letters that have been received. They'll be reviewed by the staff team at the IFRS Foundation. The IASB, the board, will review those. The board meetings are publicly accessible. The minutes from the meetings are publicly accessible. And that transparency is a key part of the foundation of the legitimacy of the financial standards, but in the context of this discussion, the sustainability related financial standards coming out of the IASB.
Okay. Thanks on that. We are getting some great questions coming in, so thanks to everyone on that. Carrying on this point, Jenna, I'm going to come to you, because one of the questions is about, the pushback within certain states within the US on ESG, and particularly ESG considerations in investing in pension funds. Do you see it as a growing piece of work, a growing body of work, a momentum that will improve and get better over time and more effective?
Well, I think in the short term, we'll see it increased just with the upcoming election cycle. It's been a hot topic for politicians to have on the radar and speak out against. But when it comes to the companies we've been in conversations with, they are not pulling back on their initiatives. They're continuing with their plans. They have set these long-term targets, and they can't go back on those targets and retract them. If they do, they would have to have a reasonable explanation to. But many of them have committed to net zero targets, or have committed to emissions reduction targets, or diversity, equity, and inclusion initiatives. So they are getting some pushback on the political spectrum from both points of view, or both sides of the aisle, but they're continuing the course. We are seeing, however, a bit of reduction in external communications on their initiatives. Companies are a little bit more hesitant to speak out against controversial issues. Like we take a look at Disney, Target, AB InBev in the US, and seen backlash around pride and diversity, equity, inclusion, don't say gay law in Florida. So companies are weary. They don't want to don't want to come under fire from politicians or investors for taking stances. So they're being cautious about what they're saying, but still continuing down the path.
Okay, thanks. We have I don't know if anyone wants to come in here. We have a very specific question, which let's see if we can tackle this. And it's I'm assuming it's coming from the Netherlands, but the question is to comment on how integrated thinking responds to the forcing of Dutch farmers to reduce livestock and plant less, while at the same time in Europe you're facing a war-induced grain and wheat shortage. Well, that's not just in Europe, that's global. These kinds of geopolitical issues, I think, is what we're really talking about here. Can integrated thinking accommodate that kind of corporate reality?
I'll have a go, but I'm not in any degree an expert on the topic. But I think that the process is important, so for a company to understand its external environment, what are the push and pull factors in that external environment? What are the politics? What are the social? What are the environmental issues? And understanding that and your position within that to make a conscious choice. So you need to do what's right for the business and understanding you can't please everyone all the time. That's not going to happen. And there will be these forces and these pressures. And then you take a decision. But, and regulators don't always get it right either. I don't think, when they start forcing one's hand in a particular situation. But I think we're leading. CCP ran a conference called Leading in Times of Complexity. We are living in complex times. There are a lot of different forces at play. And only by understanding and really considering these holistically can you make a sensible decision. And then you can go forward with some confidence. I think it's this knee-jerk reaction where people think, okay, well, we need to come out on an issue. And then they lift their head above the parapet and get quietly smacked down again through pressure. They haven't thought through that issue and what the response to their position on that issue might look like. And that's where it can take some, companies can take a bit of flack, I think, in that process. So I haven't answered the question at all, but I think from a process point of view, that one needs to think about these things.
Well, I think it raises a question, Nick. You mentioned the complexity of our times that we live in. Maybe I'll direct this towards Jenna. How nimble is integrated thinking in dealing with day-to-day issues that arise unexpectedly, whether it's a pandemic or something else? Does integrated thinking kind of lock companies into a certain way of thinking, or does it actually help in assisting being able to respond immediately to issues and difficulties?
No, great question. And I think it helps companies definitely be more agile because it's the mindset shift that Nick and Jeremy have alluded to, the change management and continuum. Having integrated thinking has broken down silos within organizations and build greater trust between business functions, that when these do arise, a global pandemic, a war, companies and executives can come together to actually discuss an appropriate immediate response and have all different considerations brought into the equation before arriving on a decision. So I think it's the mindset shift. It's a way of leading, being agile, and integrated thinking. We've heard from companies that has allowed them to be more innovative. It has allowed them to connect with colleagues that they haven't normally. It's created more of a pull from the business around ESG rather than a push. So it helps companies be agile when things arise, which I'm sure there will be something else coming up next year that we'll all have to deal with.
Yeah. Jeremy, your viewpoints on that?
Yeah, and this is obviously a very complex question. And I don't think we'd be doing a service to the question to sort of reduce it down to a necessarily very pithy answer. But recognition that companies are part and parcel of the society that they serve is integral to the integrated thinking principles. So one of the images that we created to illustrate sort of the relationship between the business model of an entity and the external environment is really that's in the integrated thinking principles really brings home that point that an organization is both buffeted by the external environment and is part and parcel of it in terms of the risks and the opportunities of the business. Since the pandemic and Russia's invasion of Ukraine, I mean, we've businesses, populations have been living through two profound shocks to how we understood the nature of the world in the 2020s to be. And I think particularly for anybody in Europe, the fact that there's a major war on one of I think Ukraine is the largest country in Europe has been shocking for the last 556 days, I think it is. So it is a very complex question. I think integrated thinking does help organizations in a structured way work through how their strategy can or should or might respond to unexpected challenges like these. I think there's a tendency in the business community to try and reduce everything to a rational, predictable, forecastable environment. And whilst much of sort of the day-to-day running of business may be like that, I think that there are always these shocks that come along completely unexpected. Nobody anticipated a pandemic. Nobody, I think, long before Russia's invasion would have anticipated that Putin would actually see that through. And businesses have to be agile as part and parcel of doing business. And I think the integrated thinking principles and integrated thinking helps organizations structure in a way how to try and ensure that they have that agility to respond to whatever the world and geopolitics might throw at them.
Okay, thank you. I want to touch on two final points there, and I'll go through each of you on this. I mean, one is, do you foresee a future where actually integrated thinking is mandated in certain areas in a similar way to how integrated reporting has been on various stock exchanges, etc.? And also, can it be taught, or is it taught? Are we seeing integrated thinking being a strategic approach that is taught in business schools, etc.? Nick, your viewpoints on that?
I think it will become more and more business as usual. That would be my take. Whether it's mandated or rated or judged, there's a lot of guidance out there already through the VRF and other processes. But it's not about looking at the guidance. It's about applying the guidance, and that takes time and energy. Will it be taught? I think that this form of thinking in various ways will find its way into the business schools. It's already there. We find ourselves talking to board programs, and I'm sure everyone is, that there's a lot of activity around, various, traditional, MBA type programs, but also specialist courses that are evolving and coming through in this way. So yes, I think gradually in both spaces it's going to become more, but it's hard to judge. It's not like a report where you can rate and look at principles and criteria and say it's more difficult to judge because it's so embedded in the way the organization runs.
Right, Jenna, your thoughts?
Right, I think I'm pretty aligned with Nick on it will become business as usual. It's a mindset shift. It's how companies manage their risks, how they manage their opportunities, and I think those that manage it well and apply integrated thinking will see positive rewards, both from internal stakeholders as well as external stakeholders. And those would be key drivers to implementing that across the board and becoming business as usual. And in terms of being taught, can't speak to business school curriculum, but I will say that we partnered with George Serafin from Harvard Business School and creating our integrated long-term plan framework. So I know it's top of mind for business schools, for those creating the curriculum, and organizations like CCP, Trialog. We're working with companies on teaching it to them and helping them implement it.
Right. Jeremy, I'm going to conclude with you on this or any other point you'd like to raise around the future of integrated thinking.
Yeah, I agree with Nick and Jenna. Integrated thinking needs to stand on its own 2 feet in terms of the business benefits. One can only regulate for something that's either a legal requirement or a standard, and it's not going to become either of those. But I think the benefits are there, and I hope that on that basis organizations will adopt, and over time it will become business as usual. Is it being taught? I can answer categorically, yes it is. We, ARCP and SEMA, have teamed up with the University of Oxford Side Business School, and we've launched a new course. It's open for registrations now on ESG and sustainable financial strategy. And the first cohort kicks off at the end of this month, and integrated thinking is an integral part of that. So you've got one of the world's leading universities and one of the world's leading business schools will be teaching it.
That's one of them. It sounds like, Jenna, there's another one there as well. And I'm sure in many other business schools. So isn't that encouraging? Fantastic. Thank you very much to all 3 of you. And what a fascinating discussion and most insightful. And thank you to all the attendees as well who not just listened, but participated and asked questions, and some fabulous questions as well, and kept the discussion going. So from our side, thank you very much. I'm going to pass back to Carolyn from the ESG Exchange to just wrap it up. But from my side, to the 3 of you on the panel and everyone listening around the world, many, many thanks.
Thank you very much, Alex. And thanks to our panelists. It's been a really interesting discussion. So much interaction on the chat and in the Q&A. It's been very, very interesting. And I have put some of the links on the event page. The recording will be available on the event page if you want to forward it to other people. And if you know of experts, ESG experts, please go to the ESG Exchange About page and apply to join our technical committee. It would be lovely to have you on board. Thanks everyone for attending. Thanks very much. Bye.